The US Federal Reserve is all set to hold its FOMC meeting on September 16th to 17th. And the big question is, will Fed Chair Jerome Powell finally cut interest rates? And what does it mean for Indian stock markets? Let's break it down. Analysts are betting that the Fed will cut rates this time, especially amid weak jobs data and rising pressure from President Donald Trump's administration. But the real debate is, how big will the cut be? Some expect a 25 basis point cut, a few are hinting at a jumbo 50 basis point cut, and very few think the Fed will keep rates unchanged again. But how does Fed's rate cut impact Indian stock markets? Rate cut decisions by the US Federal Reserve impact the Indian stock market as it weighs or boosts several rate-sensitive stocks. For example, a rate cut in the US expected to increase the discretionary spending limit, which in turn benefits IT companies, which derive a significant portion of the revenue from the North American market. Also, investors expect a rate cut in the US to pave the way for a rate cut in India. The Reserve Bank of India's Monetary Policy Committee is set to meet between September 29 and October 1. Any rate cut announcement by the RBI directly impacts the market. So let's run through the three possible scenarios and how experts say the Indian markets might react. Scenario 1. Fed cuts rates by 25 basis points. A 25 basis point cut has already been priced in by the market. Siddharth Maurya, Managing Director of business investment house Vibhavangal Anukalakara, says this would bring stability as investors see it as a cautious step. Puneet Singhania from financial services conglomerate Master Trust adds that this move might actually improve the yield spread with the US, making Indian bonds more attractive for global investors. Bottom line, the Indian markets are likely to stay steady in case of a 25 basis point cut. Scenario 2. Fed slashes rates by 50 basis points. Experts are a little divided here. Singhania feels a jumbo cut could boost global sentiment and encourage more flows into Indian debt and equities. Export-oriented sectors and companies with overseas borrowings might benefit in the short run. But Maurya sees it a little differently. He says a 50 basis point cut would be nothing short of a game changer, boosting world liquidity, attracting strong FPI inflows, and lifting emerging markets like India. So if this happens, brace yourself for a possible rally. Scenario 3. No rate cut. What if the Fed surprises everyone and keeps rates unchanged again? Maurya warns that this might spark short-term volatility in the Indian markets, especially in rate-sensitive sectors. Shravan Shetty from advisory firm Primus Partners adds that this might dent sentiment briefly, but tariffs remain a bigger concern. Singhania points out that with the India-US bond yield gap already narrowing, investors might prefer US assets, dragging Indian equity and debt markets in the short term. So this is a scenario markets are fearing the most, which is no rate cut. Now, how did Indian stock markets react after US Federal Reserve kept its interest rates unchanged at the last FOMC meeting? The US Federal Reserve kept its interest rates unchanged during its last meeting in July. The central bank maintained the same level for the fifth consecutive time since December 2024 amid geopolitical tensions and tariff-related volatility. After the FOMC meeting announcement, Indian benchmark indices Sensex and Nifty closed in the red on July 31. Sensex fell around 300 points to 81,185. Nifty 50 meanwhile closed below the 24,800 mark. Notably, markets has mostly priced in a no rate cut during the earlier meeting. What impacted markets then was US President Donald Trump's announcement to levy 25% tariff on India and an additional penalty for buying Russian military equipment and oil ahead of the August 1 deadline. Traders now are pricing in a 94.2% chance of a 25 basis point cut by the US Federal Reserve during its FOMC meeting and a 5.8% chance of a 50 basis point cut, according to the CME FedWatch tool. So what do you think? Will Jerome Powell play it safe with a 25 basis point cut or surprise with a bigger 50 basis point cut? And how do you think Indian markets will react to it? Drop your thoughts in the comments below and don't forget to like, share and subscribe for more market updates.
fighting so long and so hard that they don't know what the they're doing.